Hello and welcome to the Blythe Ray Business News. Today we're joined by Mark Learmonth, CEO of Caledonia Mining. Mark, welcome.
Morning.
So you recently announced your second quarter and first half results. Please can you provide us with an overview of these?
Yeah, we'd previously advised our production for the quarter and for the half year, and that was disappointing. So, inevitably that was going to have an adverse effect on our financials. So in Q2, we did about 17,400 ounces, better than what we did in Q1, which is 16, but still not as good as we'd expected. We should have done about 20,000 ounces a quarter. Now, unfortunately, the gold price was higher, and so that saved us in terms of revenue. But we did experience some increased costs, particularly the costs at the Bilboes Oxide project. There's about $4 million there, and at Blanket we've had an increase in our electricity cost because we are using currently more electricity than we'd expected. Now that effect is somewhat offset by a reduction in the tariff, but even so, the total electricity cost is higher, and that was reflected in a disappointing set of profits. So gross profit was down from about 18 million to 11 million. That was reflected in EBITDA, which had a comparable fall of about sort of 7 or 8 million, and that effect was amplified at the earnings per share level, where earnings per share fell from 88 cents in the comparative quarter to a loss of 0.6 cents in this quarter. And that amplification was due to things like a very high tax rate and a foreign exchange loss, whereas previously we'd had foreign exchange gains. So all in all, yes, it was a very, very disappointing, very challenging quarter.
But you had a slightly better July?
Oh yeah, July has improved. We can perhaps talk about that later. So July has improved substantially. In July we produced about 7,800 ounces, so that's an annualized run rate of about 94,000 ounces a year, so significant step up in production, and that part and parcel of that is higher production inevitably for us means lower costs, and the other way around. The lower production means a higher cost per ounce. So at the higher production level in July of 7,800 ounces, our on-mine cost of Blanket fell to $715 an ounce, which is pretty much the same as it was in the second quarter of 2022. I think it was just under $700 an ounce, and we've clearly seen some inflation since then. And in terms of cash flow terms, in July we generated about $7.7 million of cash in that 1 month. So things do seem to have turned around in July, and we're very focused on maintaining that improvement for the remainder of the year.
Okay, thank you. And how has Bilboes affected your gross profit for the quarter?
Well, it's fair to say that the Blanket's performance itself was somewhat poor. So just looking at Blanket, production in Q2 was 17,000 ounces, better than it was in Q1, but not as good as we'd expect. On-mine costs at Blanket did improve a little bit from just under $1,000 an ounce in the first quarter to just over $900 an ounce in the second quarter. So some improvement at Blanket, which is our core business. Let's be clear about that. But really, Bilboes that caused the bulk of the problem. So for the quarter, Blanket contributed just over $13 million of gross profit, but Bilboes, I'm afraid, contributed a loss of $2.2 million to gross profit, and that was really driven by a couple of things. The first is the very high stripping ratio. We had to move much more waste than we'd expected to uncover the oxide material that we were looking for. And then when we got to the oxide material, we found that actually some of it was transitional material, so not quite oxides, not quite sulfides, which meant that the recovery was a lot lower than we'd expected. So frankly, having spent a lot of money and several months now at the Blanket Oxides project, we've taken the decision to put Bilboes back on care and maintenance. So we're running off the existing mining contractor. That contract will terminate on the 1st of October. So from the 1st of October, Bilboes will be put back on care and maintenance. And during this quarter, we do expect to hopefully see the very modest cash contribution from Bilboes as the stripping ratio falls and we continue to harvest gold from the heap leach. So yeah, the fundamental problem, whilst Blanket wasn't anywhere near where we expected it to be, Blanket has improved in Q2 compared to Q1. But really, the thing that drove a coach and horses through our results was bilboes, and we've taken the necessary steps to cauterize that problem.
Okay, thank you. And can you tell us about the feasibility study you're undertaking at Bilboes for the sulphide project?
Yeah, the sulphide project is, let's be clear, the oxide project at Bilboes is just an unfortunate irritation, a diversion. The only reason we bought Bilboes was for the larger sulphide project, about 2.5 million ounces at 2.3 grams a ton. We have restarted our own feasibility studies on the sulphide project, looking at how we can balance slightly slower growth with potentially lower dilution. So our objective in looking at the Bilboes sulphide project is purely to maximize net present value per Caledonia share. And so really it comes down to a balancing act between trading off maybe slightly slower growth, but with less dilution. And so we're expecting the initial results from the consultants very shortly, and then we have quite a lot to do internally to look at the various funding options and funding structures that are open to us. I'd expect that before the end of the year we will come to a decision as to how we're going to proceed with that, and no doubt we'll make the appropriate announcements at that time.
Okay, thank you. And moving on to Blanket, the deep level drilling that you're carrying out there, why are you doing this and what do you want to achieve?
Well, it's ordinary course of business to do deep level drilling with a view to either finding new resources, but at this stage we're actually focused on the other reason, which is to improve the confidence level of our resource base. So to move things from inferred to measured and indicated. Our drilling will be focused on two areas. The one that we announced a few weeks ago is the first area, which is Eroica, and it's fair to say that pretty much every hole we drilled came back with better widths and better grades, quite considerably better. So in overall terms, it was about 50% better than we'd expected. Now that will flow through in due course into an increase in the tons and the ounces, which will extend the life of mine. I don't at this stage think that we'd be able to increase production substantially above our target rate of 80,000 ounces, because to go over 80,000 ounces, we'd then have to spend quite a bit more money on increasing the infrastructure. But it's good news in that we can continue to use our existing infrastructure underground, which goes down to about 1,200 meters for longer. And then the next phase at Eroica will be to drill deeper with a view to identifying new resources below our current infrastructure, and then clearly with that then gives rise to the question is how we're going to access that. So that's at Eroica. The other drilling area is on the other side of the mine, in the Blanket area, and that work has started. It's in progress, and we'd expect to put a repeat announcement out later on in the year, referencing the results that we found at Blanket. So that's the other half of the program.
Okay, thank you. And why is the direct sale of gold from Zimbabwe such a big milestone for Caledonia?
Well, historically, we've for years, and I think since 2014, we've sold our gold to Fidelity Printers and Refiners, which is a Zimbabwean refiner which is owned by the government. And so effectively that meant that we were taking government credit risk. We were relying on the ability of the government to pay us for the gold that we delivered. And in practical terms, it was never a problem, but from a perception perspective, investors always had this concern, this suspicion that we would see an interruption in our payments, the receipts from the government. And so it was very important for us that we were able to take advantage of changes in regulations that were introduced about a year ago, really, so that we could actually then commence the direct export of gold ourselves. So our gold still goes through Fidelity Printers and Refiners. They take it from Doré, about 85% gold content, up to 99.5%. It's still our gold at that point, and then we export it to Dubai, and we get paid within about 48 hours of delivery, which optically is great. It makes life a lot easier for us, but I think the perception is that it just improves it de-risks us from an equity investor perspective. And also the fact now that we've got a revenue stream arising offshore outside Zimbabwe means that we, if we wanted to, are better able to access offshore debt, non-Zimbabwean debt, to help us fund things like the Bilboes project. So it's an important step forward in terms of perception, really.
Thanks, sounds very positive. And finally, we've already mentioned July, but can you tell us a little bit more about the second half of the year?
Well, it's going to have to be better than the first half of the year. The first half of the year has been really very disappointing. So we've maintained, given the fact that the production in July was very strong, better than we expected, that's continued through into August. And also given the fact that the higher production level, we're seeing a return to what we expected in terms of overall cost per ounce. We've stood behind our production guidance for the year of between 75 and 80,000 ounces. We've also stood behind our online cost guidance of approximately $800 an ounce from Blanket. And yes, we expect to see a continuation, perhaps not at the same elevated rate as we experienced in July, but certainly substantially better than we experienced in the first half of the year, through to the end of the year, which gives us, which means that we can still achieve our overall guidance for 2023. So the second half of the year looks like it's going to be an awful lot better than the first half of the year.
Great, that's good news. Thank you very much for joining us.